Andy, China's population, $1.5 billion, 1.5 billion people, the second biggest economy in the world. And yet these stocks are proving over and over to be uninvestable. Is there anywhere safe to invest in China?
Hi, Sarah. Thanks for having me on your revamped show. Congratulations on that.
Thank you for joining me.
I don't think uninvestable is the right word. This is clearly a very tough macro environment for China right now, and sentiment's really taking a beating. But I don't think the problem is really with the companies, and I think let's put the COVID story in perspective. There is a significant rise in cases, but there's only about 8,000 people in Chinese hospitals with COVID right now. We've got about 20,000 here in the United States, and of course our population is about a quarter the size of China. So you could argue that their vaccines are actually doing a pretty good job of keeping people from getting sick, keeping people from dying. And as we've seen over the last year, the government there is putting public health over economic growth as a priority. So while they continue to lock down, this is going to continue to dampen consumer spending as well as manufacturing and construction activity. But this doesn't make China uninvestable. It just means there's going to be a rough few months.
So are you saying you would buy some of these beaten down tech stocks on a dip like today? This is not their first either. They've had a number of dives recently on regulatory issues and China slowdown fears.
Well, as you know, my expertise focus is on the Chinese economy, not on the stocks. So I never give investment advice. But what I would say is that I expect in the second half of the year, the macro environment for investing in China is going to be significantly better than it is now. I think COVID is likely to be more under control by then. And also from the economic side, while we're talking about tightening here, the Chinese government has signaled a clear easing approach. They've already been cutting rates, and I think more rate cuts are coming. They've made credit more available to companies and to households. We're looking at a really big fiscal stimulus taking place this year, an increase in government spending of about 16% compared to last year when it was flat. We're seeing loosening of regulations on the property market, and we'll see a choppy but less tough environment on the regulatory side for those tech companies that you talked about. So I'm pretty optimistic about the macro environment for investing in the second half of the year.